This is In the Final Analysis.
Welcome to the In the Final Analysis podcast Minisode. Here is our wisdom financial advisor, Joe Frederick. Hi, Joe.
Hello, Kylie. Good to be
Uh,
with you again.
you as well. I am, as you say, Kylie. I am the media support manager. And today we are going to be talking about stock market basics for Gen Z, which is going to kick off our series about different investing niche topics for generations. And for anyone listening, Gen Z is our youngest adults right now, starting being born in about 1996-ish, depending on who you ask, um, through the, early 2000s. And so most of them are college age and getting into their mid 20s, or maybe a little bit also into their older 20s. I feel aged at this moment. Um,
Yeah, I'm with
uh,
you. So, yeah.
and there is a lot of footage these days of people, Gen Z people on TikTok and YouTube and other social media platforms, um, learning about the investment sphere through finance influencers and podcasters and seeing people, doing investing by themselves on platforms like Acorn or Wealthsimple. You even see these, I don't even know what they're truly called. I guess I call them trade houses, where it's like a frat house of all these guys who like do full-time day trading together.
Yeah.
Um, and you know, almost treating investing like sports betting, which I know is another big problem right now with Gen Z, especially due to the influence of poor advice by inexperienced luck seekers on social media.
Yeah.
Um, and so it's kind of a trendy thing right now for the youth is investing, which in one hand is kind of cool, because you know, investing early in your adult life can be so important. And Joe, could you tell us why?
Yeah. And that's a great point. And it can be very beneficial to start investing at an early age. And actually, right now, surprisingly, on average for Gen Z, they're actually starting to invest at 19. It's kind of the average age of when they're starting, and it's very interesting on what they can do with that because um, you know just to give you an example, at age 19, if they started investing $5,000 a year, if they put $5,000 a year aside at age 19, and just received, and each year they were able to put aside $5,000 up to age 65, with just an average 7% return with that up to age 65, they'd have $1.5 million. Okay.
Wow.
And that's just, but you're correct. And, with it, so they're not looking at something like that. That's information I think they need to have because, yeah, they are starting at a younger age, obviously, surprisingly 19. But yeah, they're investing a lot into crypto. Crypto's a new thing.
Mm.
44% of the Gen Zers, there's like invest 32% of their portfolio in crypto.
Oh,
So
wow.
it's these new type of crypto, or they've got into private equities a lot. Doing their day trading, and they're using these different platforms, to do that. And again, just based on what I said, if somebody was 25 instead of 19 and they put $5,000 away a month, that's only $30,000 less. 6 years, they'd only have 500,000 by the time they were 65.
Wow. That's a
So
big jump.
it's a big jump. So it's good that they're looking at investing, but they are in their investing, they are taking a lot of risk at this point to try to make, sums of money, pretty fast using these platforms and studying those. And that's where they're getting all their information on social media platforms and internet, basically. Yeah.
Right. And for people starting out in investing, especially when they're younger, you would hope that they're doing a lot of research going into actually putting money into things, and learning about the different avenues that you have with investing, with its retirement accounts and stocks, ETFs, and all this different things that you could be putting money towards. Um, could you go into detail about what sort of research they should do to prepare to help protect them while they participate in investing?
Yeah, I mean, things they need to learn from a protection standpoint, and things we do here. Um, you've got to develop in gathering information from any client. They got to decide what type of risk they're willing to take or wanting to take. Um, Obviously, younger people, they have a lot more time before their retirement, so they can take a little bit more risk. And obviously, we tend to draw back the risk as they get older or closer to retirement, to take those things back. But they're, the Gen Zers, as we say, are using internet, social media. They're trying to look people up on, again, all internet social media sites to gather their information to learn about investing. As you move up, millennials and things like that, they're doing some social media or internet, but they're also getting with their family, older siblings in their family, taking some advice there. They're using financial platforms, big outfits, say, like a Merrill Lynch or, to invest or something like that, looking on their website, or, they're using, financial professionals as well to gather some of that information, where they're using those resources. Each generation is kind of different on what they're using. So it's very interesting, but we got to try to be able to touch all of them, in that facet. It's very important. It's precious. Money is precious to everybody, no matter what your age or where you're at. So, you got to find those things out, like risk, and that's really what they need to be figuring out, is how much risk they're willing to take in their investments. And for us, working with any generation or any people, again, money is precious, and we want to know everything about them and what they're doing. It's like, again, I was a former golf professional, and this is why I love this, because it's like when you're teaching somebody and you're working with somebody, and again, it's physical. It's physical. It's also mental. It's being able to manage a golf course and everything like that, of what type of shot you're going to hit and what club you need to use, and it's picking the right club. And as a financial professional, that's kind of what it's like when you're doing your research. You want to pick the right club of who you want to go with, that you feel comfortable with, and be able to work with. And those things are very, very important.
Yeah, absolutely. And are there like certain resources that you would recommend, that especially younger first time investors look towards for gathering their research and making sure that they are, going into this as well prepared as they could be if they are going into it by themselves?
I would say, they need to, obviously gather as much information as they can, both through the internet, but they need to talk to people that understand. There's no guarantees. Nobody knows, what's going to happen for sure. I can't predict it. Nobody on Wall Street can predict it. Nobody in the political aspect can pick it, to tell us, there's no guarantees. So, using every resource you can, whether it be the internet, whether it be some type of financial platform, or working with a financial professional, or is a good thing, just to gather information. Whether you're, have your own app and you want to do your own thing, that's fine. But having some counseling and just really talking to people and gather as much knowledge as you can is very beneficial. But like I said before, the big thing is you've got to decide as an individual how much risk you're willing to take, um, with your money, and financial professionals can help talk you through that and help you with that, trying to figure out how much risk you're willing to take, with your money and going forward. And you can still have control of it. The financial professional doesn't have to do the trading or anything for you. You can still decide that, but it's a really good idea to sit down and talk to somebody that understands how investing works.
Absolutely. And if you'd like, listeners, if you'd like to find out more about risk tolerance and how to get a better understanding of your own, we do have some resources on our website, www.wisdomchoice.net, in our financial intelligence tab and our Your Money Emotions sub tab. We have a questionnaire about your risk tolerance, and we have uh, quizzes about your potential biases, as well as tons of videos and articles and infographics in our investing special topic resources that you can learn more about, say, like not only just the basic definitions of certain. I keep trying to not say options since that is an option.
Yeah, yeah,
That
it
has a
is.
different meaning here.
Right, right.
So the different ways that you could invest in the different avenues and
Yeah.
how they might help you and ways that you can calculate potentials for yourself through the different information resources on our website.
What's interesting right now, in talking about this, Kylie, is um, there's about to be a huge transfer in wealth, and it's going to be going to the Gen Zs or the millennials and things like that, from the baby boomers.
That's right.
And that's New York Times has been reporting, and reading that there's going to be like 16 trillion that's going to be expected to transfer in the next decade. Okay,
Wow.
so with this big transfer, I mean, not only is it a transfer of wealth, but it's a transfer of economic power and influence that's going to be moving, and that's very significant in what they're doing, and with how the millennials and Gen Zs are going about it. Like I said, a lot of them are going at it on their own with the social media and the trade apps and everything, and you've got a major influence of power moving to this direction. And there could be, again, a lot of money moving through these trade apps and things like that, possibly if they, continue, to do that. And that could reshape the financial landscape of, how we work with people, and, who wants to work with us, because, that could be a major influence, going forward in the financial world. So it's very interesting right now. Yeah.
Yeah. I mean, do you personally see um, a change in maybe people working with advisors less with their investing and trying to go at it more by themselves? Or do you feel like in the industry, an advisor's role is going to stay fairly steady?
I think an advisor role is going to stay, pretty steady. The difference is like, I have clients right now that, yeah, they want to do some things on their own. They want to do some trades and things like that, and they want to discuss it, but they want to control it. But it's it's what would you call it? I guess it would be more along the lines of like a discretionary type of income where, okay, I've got this little amount of money that, hey, I'd like to invest in some stocks and things like that, and kind of take care of that on their own. So, and we just kind of talk through it and advise them a little bit on it, but we don't get anything from it. They take care of it. They control it. It's on their own. So we have those type of people, but again, the Gen Z, it's like that's what they want to do. I mean, they want to be investing and on their own and taking their money and doing it, which is which is fine. So, I see it both ways. I mean, we do have it, but I have some young clients that have come in and that they've started some investing, like I was, talking about earlier, trying to put a certain amount of money aside each year. They're working and doing that, and they're off to a great start. So it's both are out there. People that want to do it on their own, and people that still want to have the security and of working with somebody and getting some financial help or advice per se. So
Great. Yeah. And do you feel like there are some like strategies or even a mindset that helps young or first time advise investors, pardon me, um, kind of enter into the investing realm in a place of kind of more maximum protection?
um well, they again with private equities and things like that, they're taking a lot of risk, and they feel that they can do a lot with stocks and bonds. Is kind of so they're really out there in some risk, some high risk situations, and they do some with bonds, and bonds are obviously a little safer, um, with what they're doing, but yeah, that's a tough one. But yeah, they're out there and they're being bold and they're taking a lot of risk. And again, with some of their ages, they can afford to, as long as if something does happen where things go bad, that and that's where the risk is involved, is if they're losing money they can't afford to lose.
Right.
And that's kind of the big decision they had and or have. And again, with this, what I was saying earlier about this transfer of wealth that is possibly coming, and the big influence. Well, if if they're really being high risk with that, trying to grow it and grow it fast, doing this day trading and things like that, um, it's potential they could lose a lot of their wealth, with no guarantees. So
Yeah.
um, it can be exciting and it can be scary.
As so many things with money can be.
Yeah, absolutely, absolutely. But like I mentioned earlier, it is precious, and and we certainly take that into consideration. It's important for us to get people where they want to go, and that's been a huge transition for me. Is why I love this business. Just like when I was teaching golf, I was able to take different individuals that had different body types and different styles and different mental attitudes towards golf, and get them where they wanted to go in their way, in the right way. And um, being able to do that here gives me the same gratification, because some people want to take a little bit more risk. Some people you know just want to be a little bit more moderately aggressive, or they want to be kind of defensive, and you just learn those body types, and hey, here's the club that we want in this situation, and this is the path we're going to go. And and we can get everybody there where they want to be, in retirement, and take care of everybody in the same way. You just have different paths, and you get through that, by getting to know them, and they're precious cargo, and we want to help them along the way.
Yeah. Yeah, absolutely. And especially if you're starting so young. I mean, at 19, I can't even imagine thinking about investing when I was 19.
Yeah, yeah.
Like it's so much, you have so much opportunity there to be able to work smarter, not harder necessarily about your investing journey and the path of the life journey of your money.
Right. I mean, that's what we were taught. I mean, obviously from my parents, and that is, started, yeah, you want to try to invest in early, but it's more into a savings type thing where it can grow and work for you over time to get you to that point. Um, like a lot of things, everything fast paced now, you know,
Absolutely.
ever, everybody wants it now. It's like going through a drive-through. I want to go get it, and I want to have it fast. And it's like I want to get in this day, and I want to make money, and I want to get out, and you just want to continue to do that. It's like they treat it like a drive-through sometimes, I guess. Probably a bad analogy, but
No, I feel like
but
that's fairly accurate, at least
yeah,
from some of the more dramatic videos that
yeah,
I've consumed online. Because yeah, I mean, I've seen videos of, these young adults having these really high highs and then like an hour later, really low lows.
yeah, absolutely. And obviously it's social media, the internet, phones are driving this thing faster. I mean, people are trying to be influencers all the time on TikTok or Instagram or whatever, and get to a point where they can get paid. And the investing for a lot of these young people are kind of the same type of thing. Hey, I can take my money and get in, and try to get in and get out, and make money and continue to grow. It's that I think it's that same type of mindset that hey, I can do this on my own and make it. I don't maybe they're not working. I don't know. Maybe they're just trying to do that full time, or um, I'm not sure where that's at, but again, they're starting at a very young age, and they're trying to make their fortune, real young.
Yeah, and good on them.
Yeah, absolutely.
It's
Yeah,
I'm constantly impressed with Gen Z, and they've been touted as, one of the most entrepreneurial generations we've had in a long time. They're, you know, really good at being self-sufficient, going out into this world that might be,
yeah,
overwhelming, especially with how much, like you said, is on the devices in their hands constantly, and how much impact that has on not only their personal lives and entertainment, but like their careers and their money they're investing, and how
right,
they are they're working hard against a really big overwhelming world, and I think for the most part they're doing great. I am just glad that there's people in organizations like Wisdom that I'm like, here's information for you. We want you to self-educate, and we are here to answer your questions and help any way we can.
right, right. Yeah, I mean, we work with a lot of people that are not clients
Yeah, absolutely.
all the time, and we're just here to we're just here to help each individual, no matter their age or generation, or whatever it is. And we enjoy that. But yeah, it's it's crazy to think, as I said earlier. I mean, the major influence and landscape could change totally with how we look at investing, and it's in their hands. It's in Gen Z's hands, and
Yeah,
um,
literally and figuratively.
yeah, yeah, so it's important, to you really support them, and reach out to them and give them any help or advice that we can, because that they could have control of the financial world, going forward, for sure.
Yeah,
Yeah,
overall I trust him with it.
yeah, yeah, it could. Yeah, when you talk about changing the whole idea of investing, I mean, you're talking, Wall Street and all that stuff is like, what use is it anymore? That'll never happen, um, but it's yeah, it's interesting to look at the influence that they have. And yeah, it's there's a you kind of touched on, there's almost like a stereotype there that oh my God, that they don't want to work, they don't want to do this, they don't want to do that. But man, they are finding other ways, and to them better ways, to make money, where it's not the traditional way of, you get a job, you work, you put money away, and they're trying to do it in a different way, and influence you in that matter. And yeah, they could change the whole landscape of a lot of things, which would be fun to watch, really. I mean,
Yeah.
it'd be amazing to watch, is probably a better word. So
No, yeah, they are. Gen Z is truly a pioneering generation. I constantly feel like a really proud big sister as a young millennial,
Yeah.
watching people who are even just a few years younger than me be especially so confident. I feel like Gen Z has so much confidence
Hmm.
and with the way that they're moving through the world and changing everything they touch. It's really, really cool.
Yeah, definitely.
All right. And, not to make it about me, but next week we'll talk about millennials.
Yeah, absolutely. Yeah.
Yeah, we will get into this was kind of the finance 101 version of investing and talking about what's going on generationally. Next time with millennials, we'll kind of get to finance 202
Okay.
about it of
So what you're telling me is I get to influence you on how you invest. Is that what you're
that's
saying?
right. No, we are definitely not going to talk about my investments.
Yeah.
No, but we will talk about kind of where the people in their 30s-ish are at, by and large, with financial trends and in the investing sphere, and how we can prepare, as we get on more solid feet for working towards retirement and making sure that our finances are set as we keep going. But that will be next time. And in the meantime, listeners, you can find everything that we talked about and more again on our website at www.wisdomchoice.net. And then we will see you in the next one, as well as in our full length episodes with our managing director, Jim Yaki, which should be also premiering right about the time this episode comes out. So we'll see you real soon. All right. Bye, everyone. Thank you, Joe.
All right, Kylie. Thank you.
Thanks for tuning in to the final analysis. We try to keep you informed. Be sure that you're on the email list and call us if you have any questions whatsoever. Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professionals before making important investment decisions. Securities offered through Cambridge Investment Research, Inc., a registered broker-dealer, member FINRA SIPC. Advisory services through Cambridge Investment Research Advisors, Inc., a registered investment advisor. Cambridge and Wisdom Financial Management, LLC are not affiliated.